That's how we lost, I think, over $6,000 that we had worked for. Within those 7 months, we successfully sold products worth about six point something million dollars.
Hello and welcome to the Diary of a Budding Entrepreneur podcast. I'm your host, Martha Munyeki, and today we have a very interesting and awesome episode because for a long time since we started, we're going to have the other gender. There was the notion that it's a women-only podcast for women entrepreneurs, but I want to debunk that myth by showing you the other side of entrepreneurs, the male side. And today we have a very awesome guest. I won't say much. I would love him to introduce himself so that he can tell us all about himself so that I may not box him. So welcome to the podcast, Erick. You can tell us more about yourself, maybe even your full name. Yeah.
Okay. Thank you, Martha. Thank you for inviting me. Name is Erick Kinuthia. Kinuthia Kihiko. I'm an entrepreneur. Just this is the diary of a budding entrepreneur. So I'm just there. I'm almost to get
sprouting.
I'm on the sprouting stage. I have been in the space for a couple of years now, trying to build different things. But now this is, as we speak, I'm now at the stage where I officially get to. I'm officially now building. All the other years were preparation, working for other people, working for other projects. Yes. So in the course of this podcast, I'll share more about what we are building, currently building, and where we intend to
go.
Yes.
Okay. So maybe before we start, so that we can give our viewers some perspective, some context, whatever we're talking, you can tell us briefly what you're currently doing or what area you're currently pursuing.
Yes. Okay. So I'm in the field of finance purely, but then it's finance integrated with other ecosystems. By finance, I mean we officially began our venture, which is Cach Finance. We began from with a crowdfunding model. That was the initial idea. But then as we've been discovering more about our Kenyan economy, as we're still doing more market research, we are pivoting from crowdfunding, going towards now more finance models. That is lending. We are majorly building something along lending for small businesses. People who are beginning, anyone who runs a venture, whether it is an online store, whether it is an e-commerce, or even just on the ground, as long as for the small businesses, small to medium sized, will be in the lending space.
Awesome. Actually, the main reason why I invited Erick to this podcast is because I interacted with their page Cach Finance on Instagram, and I saw the concept of crowdfunding, which is still a jargon to most of us, the small entrepreneurs, the budding entrepreneurs. He'll be telling us more on that. But before we get to that, I want him to take us through his journey, because this podcast aims at learning from entrepreneurs, both the budding, sprouting, the ones at the peak level, understanding their journeys. You get to learn so much from that. So I want you to take us from the genesis of your entrepreneurial journey. Maybe were you working for someone, like a corporate setting, and how now you pivoted to your journey generally?
Okay. My journey goes all the way back from when I was very young. I've come from a somewhat entrepreneurial background, borrowing a lot of insights from my own mom. I also grew up in a homestead where there was we were with our grandparents as well. So I've learned a lot by seeing my own grandfather, that is, start businesses, close them, deal with all the hiccups that a business brings along. Then I've also seen that firsthand, working with in some of my parents' businesses. But then as I grew up, getting to campus, living through campus, getting out of campus. I have generally been someone to not sit but to be always on the to be always
Grind,
on the move, always on the grind, because by the growing up, and even from the background, we were not really that privileged to have the things that everyone wants. Yes, the luxuries people want. Yes, so I had to from quite an early age of just fresh out of high school, I had to start looking for a way to make income. Yes.
And what was that? Now you can tell us. Now we've gotten to the stage where you're getting to campus, and now you feel like you need to have your own hustle, like you're something that's bringing you some money. So you can tell us some of the hustles you did while in campus.
Joining campus, my purpose was based on my academic background. I had a very clear line that I wanted to pursue. I was to complete my degree, pursue my master's, get a PhD, because I was also privileged to join campus quite early. So when I did some calculations back then, I had actually seen that I would maybe be having a PhD by the time I was about 26. Yes. So, but then first year into college, then I realized that campus is a very different place, because now you have to interact with lots of people. Then you have to, it's the first thrust at adulting, and
for sure.
Learning to, I would say, learning to fend for yourself now. So by that I mean I discovered that the money I was getting from my parents could not satisfy my needs.
All your needs,
all my needs. And that's when I think I began. So I met a few friends. We were with from previous schools. Our high school met in campus. We used to share ideas, engage. And then along the way, sometime during my second year, is when a friend of mine introduced me to Forex, introduced me to something known as to crypto as well. And well, this person introduced me to this industry, because it is really an industry of the world of money. I realized then I need capital to, to even try this Forex or even crypto. But then this capital I don't have that. But then from the little money that my parents give me for upkeep, I now started thinking, what can I do? That is when I began. I used to began by thrifting. I used to thrift clothes in my second year. So I used to pick clothes in downtown Nairobi. Then sell them around campus. That is when I really began. But then from thrifting clothes, it was not really sustainable, because then I just didn't see myself doing this.
You are not passionate about it.
Yes, I was not so passionate about it. But then along the way, I got to bump into opportunities like M Global. I have been I have sold M Global around Nairobi.
Is it the one that let me recall? Like the one that people allude to being like a pyramid scheme.
Yes, exactly. Which I also want to debunk that it is not. It is, yes, a pyramid scheme. But then it's just that it works on a business model that somehow we don't really understand. Because the business model of network marketing was that you have to refer people to
earn.
Yes, you have to refer people to earn. But then the primary company that you're working for, in that case, which was it was M Global, they wanted to sell supplements. So at the end of the day, the company wants to sell supplements. But then they have come up with a model where you you have to bring someone.
Yeah, like a chain.
Yes, like
Yeah.
a chain.
Yeah.
But at the end of the day, if you look at how the model works, all this, everyone who comes into the company buys these supplements.
Yeah.
So that was M Global. So along the way, over the years of my campus, I starting from thrifting, going to M Global,
Yeah.
made some money there. Then I went on to now actually, while I was doing all this, I used to now study how Forex works.
Yeah.
I used to study how crypto works. So this was in around 2017 is when I like officially began like practically, trying this Forex, crypto.
Yeah.
Yes, but then I would say while Forex and crypto was this how we are, this how we know Forex, Forex people, and there's the notions we have.
Yeah.
But I would say they were really the introduction. They were really
pioneers.
The pioneers of me getting to understand very complex things in terms of how economies work, how countries, continents, the dynamics of global trade works, because Forex is basically foreign exchange.
Yeah, foreign exchange.
Yes.
Yeah.
So by understanding what makes countries, their currency to go up or down, I had to go deeper into understanding what really makes this currency to either fluctuate.
Yeah.
So then that boils down to the economies. Yes.
And just to paint a picture, I forgot to ask this before you started.
Okay.
You've mentioned quite a bit of, like, it shows you're a bit passionate about finance. So I'd love to know the course you're pursuing and which specific campus you're in.
Okay. I was in JKUAT.
Interesting.
Being campus Juja, pursuing actuarial science.
Which years?
Class of began in 2016 all the way up to 2020.
Oh.
Yes.
Okay.
Why did you ask about the year?
Because I was pursuing the same course, same campus. But I graduated. JKUAT. Yeah, but I graduated just a year after maybe you joined.
Okay.
Yeah.
Okay.
Yeah. That's quite interesting.
Yeah.
Now we've reached to the part where now you are trading with you are doing the forex trading and all that.
Yeah.
Now did this run throughout your campus life, or at what point did you now venture into other?
Oh, okay. So I began the Forex crypto thing sometime around second year, but then along over those years, it was not sustainable. First, for Forex, you need capital to trade with. I did not have capital.
Yeah, you're just a campus student.
Yes, I'm just a campus student.
Yeah.
Same applies for crypto. I did not have money to buy crypto. But then because I've always had like an urge to keep seeking new information.
Yeah.
So I think what really as I proceeded on to the later years of campus, I got more into like kind of researching more how just to understand how business works.
Yeah.
I would say that I think that really introduced me to something that is very different, which is the digital economy. Starting that journey back then with Forex and crypto.
Yeah.
Because the digital world, in as much as I would say this is in the last few years has really been the time. I think after COVID is when people really got aware. Yes, got aware of what digital, like they were fully online. Yeah. People now started appreciating that you can actually run a business online. Yeah, all this. Yeah, like we were thrust all of a sudden by COVID to like the digital
online
world.
Space. Yeah,
we have to order things online. We have to buy things online. We don't have to carry cash around anymore. Yeah. So before the years before, which was all the way since 2017.
Yeah.
I used to really study a lot and research just how online works, how the digital world works. And I used to also try things like affiliate marketing. I did learn a bit about affiliate marketing. I used to try, you know, find some money, a little money from, you know, from maybe my parents or friends, then try something, just to experiment. So tried a bit on affiliate marketing. I tried running a dropshipping store, which is Shopify, maybe for people who've really been in the online spaces.
Shopify, but I don't know the.
Yes. So I did try to run a Shopify store back then. Then also just selling at some point, just to, you know, to connect. At some point in campus, because of this actuarial science, one of the attachments that I did was selling insurance, because then we had to do the internship in the attachments for schoolwork. So when I'm at home, when I'm not in school, I am doing the digital, you know, I'm in the digital space, you know, trying to, you know, run an online shop. But then when I'm back in class, or maybe when I'm now working for schoolwork, now it will now bring me to the kama mambo kwa ground. Then kwa ground, that is where I at one point was selling insurance. I did sell. I moved around Nairobi. I think that is the period when I really learned about Nairobi, how Nairobi operates, where the money is, where, you know, all these different streets. Because then when you're selling insurance, insurance is one of the hardest. Is one of the hardest places to try to. Easiest task. Yes. It's one of the most difficult things to sell.
Especially in our economy, which is developing. The penetration is still quite low.
So now you can imagine, you know, juggling all this at one point, but then all these were very short-term contracts, because I think I did not stick in one thing for even more than 3 months.
That's really short.
Yes, that was really short. It was majorly a period to just try, you know, just experiment something, understand how it works, then move on to the next. Because I love reading. Yes, I love reading books. And some of the lessons I have taken over time from some of the different business books I started reading from a very early age was that the period when I'm young, especially the period of my 20s, is really a period to learn
and experiment.
You know, try things, fail, then move on to the next. If something is not working, move on to the next. Then until now, in the later periods, in the later years of now, when someone is really defining their career, now that is when I get to now stick to one field and pursue it to the fullest. Exactly.
So now you the point you've reached is where now you're juggling between different roles, both on the online space, you're also doing your schoolwork and all. I want you to get us to the first now entity you founded and how you get to that.
Okay. After campus, a friend of mine called me. I think after COVID came immediately after campus. I think that is when COVID came, and I had to go back home. So that whole 2020, I really have not much recollection of even what I did for that year. But then now 2021, a friend of mine back from high school calls me, tells me he has a job. He has a job he needs to work on, and he needs some people to add to the team. So he calls me and he tells me that this work is a crypto project. And we need a few people. And I have been somewhat a people's person from
early on.
Yes, from early on. I asked him, how many people do you need? Where are you going to work from? So he had a small office in Eastlands, somewhere around just around Eastlands.
Yeah.
And he needed people, about 10 people.
Mm-hmm.
I always have, I'm the person to get things done.
Yeah.
When it's time to get things done.
Yeah.
So I found 10 people, some of my friends, then also some referrals.
Yeah.
Then we went, we began the project.
Mm-hmm.
It was a project that lasted about 6 months. And that project really was kind of my opening. To understand my strengths, what I'm capable of doing.
Yeah.
And even just expose me to the whole world of crypto.
Yeah.
Because back then we were still in campus, when the other friend introduced me to crypto and Forex back in 2017, I only, kind of barely scratched the surface.
Yeah.
Yes, because I did not, I did not have even the capital to invest.
Yeah.
All that. But now this project that we've done, we did it for about the better part of 2021.
Yeah.
For about 6 to 8 months. Then in that time, that is when I learned that I really got to understand that I can actually lead a team.
Yeah.
Because my friend was the one, he had the project. He used to talk with the owners of that project.
Yeah.
Then I would be the person to now connect him with the employees. Yes. So all that I learned that I can manage people.
Yeah.
I can also manage like kind of a big project.
A team also,
Yes, a team and a big project. And now I got to understand the world of crypto.
Like the technicalities.
Yes, the technicalities, the industry itself. Why am I giving this foundation? Because it is very important to how my journey transitioned later on at that year. So now later on in the year, I also got to the point leaving this project. The project was almost over, but then we still had about some 2-3 months to go. But then it got to a point that again, that character in me just to leave things when I feel like I've had enough of something. So I got to the point I had to tell my guy, I think
I've served my time.
Yes, I've served my time.
I've
learned what I was here to learn. So let me move on to other things. So I leave the project, go back home. There's nothing new to do. So then I have to start again. Now there's no campus anymore. I cannot go back home. Because now it's now time to start looking for an actual job.
For sure.
So back to the online, to the digital space. I had also been introduced to Upwork earlier on. Upwork is a freelancing platform where people can get online jobs, jobs to work remotely. So immediately after I left my friend's workplace, I got home and I created an Upwork account. Then tried to look for jobs. And that was the beginning of the next venture that I kind of now built. I would say that was now the beginning of now the next big journey. Because in that venture, there was obviously some smaller contracts, some initial jobs that I got when I was just beginning Upwork. But then a few months into finding jobs on Upwork, I landed on this project. So this project, it's crypto related. Actually, all the work I did.
So still on Upwork, you are looking for things that are leaning more towards the crypto projects?
Yes. From the first project to the last project I did on Upwork, everything was purely crypto.
Actually, that's new to me because I've always thought Upwork is more of academic and like article writing and all. So you can still focus on such technical projects.
I think because I've been in Upwork for quite some time, there's really any project you can think about, from developer jobs, very technical things, developer jobs, social media, marketing, any
like a market for experts.
Exactly. Any work that you can do remotely, you can find it on Upwork. Yes. So started with small projects, but then transitioned to a bigger project. Now this big project was three people approached me. There were three founders for that project. And they wanted to launch a crypto project. By then, that was late 2021, and we were in a phase of NFTs. Crypto moves in phases.
You can tell us more of those jargons.
I will get to crypto later on in this conversation. But that period, when I applied for this job posting on Upwork, then we started conversing with the people who are now hiring. So then they told me there are three on the team, three founders. They wanted, they were just beginning their project from scratch. So they needed now to run this project to the end. It was still kind of short-based because it was a project that was only supposed to last about 8 months. But from the time we began, we met, to the time I was exiting the project, which was about seven months later, we had grown their community. Now I came into the project myself and I also brought my team because
the same thing you were doing in the previous
job. Same thing I was doing in the previous job. I also brought
your own team.
Because when I was negotiating for any work that was taking on Upwork, I used to always negotiate from a point of I have a team. I have a team,
and that's brilliant.
Yes, I have a team that I can bring on board. If you have a lot of tasks, because again we have plenty of labor here, but then these people are looking for, they want people to work with. So I got into the project. The first few weeks, I only brought about 10 people to the team, but started with 5, then 10 people. But then during the peak period of the project, we were about 30. We got to, I was running like a team of about 30 people.
30 people,
Yes. These people simply came with the money, the idea of the project, and they took care of the business side of it. Now I was the one to run. Like how are they going to sell? How are they going to engage with their customers? All that. So I was doing all that with now this team of mine, because now this team was purely some of my friends we are within campus, and some of their just some of their friends of friends. As long as someone could do a task, they were pretty simple tasks, but then as long as someone could do it, then they were
your game.
Yes, then your game. So by the time we are completing the 7 months, now we're exiting the project. We had moved this project from 0 members because they were building a community. Crypto revolves around communities. And for you to sell any crypto product or a crypto project, you somehow needed your own community. Everyone knows about crypto, but then you needed to like build your own like the same way someone builds a TikTok audience or an Instagram followers. It's the same way, but now we used to build these communities in Telegram and Discord. Discord is also like a social media, but for the nerds, the techies. So we used to build this. So we moved this project from we started this project at 0 members, and I think by the time we were hitting month 5, we were over 150,000 members. We built that to over 150,000 members on Discord, and each product that this project was selling, each product was based around, each product would sell for about $1,000. The founders of the project were based in Canada, so we used to sell products worth each was going for around $1,000. And we successfully sold within those 7 months. We successfully sold products worth about $6 point something million.
Wow.
So this by the time now,
and this is just to understand. Now, this belongs to the owners of the project.
Yes, this belongs to the owners of the project.
They are paying you separately.
Yes, they were saying me. They were paying me separately. So I was getting a salary and a commission for you know,
the sales you make.
For the sales you make.
Yeah.
So it was a very interesting project because now you can see that from the previous project where my friend, we used to do it in Eastlands. Now having to manage this other team for well, I'm dealing myself directly with the founders, only from Canada. Then we could. That is when I realized that I can actually convert the team. I can actually sell an idea. I can sell a vision to a couple of people. And you know, we can, you know,
you can build something from that.
Yes, you can actually build something from scratch. It gets to somewhere. So finally the project had to come to an end. Because how the model of how those businesses used to work was that you had to, you know, build a community, sell your product, then that's it. So now you're left with only a very few people on the team to now manage these customers, or maybe, you know, customer support. You know, just talk to customers in case someone, you know, complains something. You know. But that would only need like about 2 to 3 people. Of the 30 people we were, that would only need 2 to 3 people. But then again, I also felt that my time had
come to you know when to leave the stage.
Yes. So I did quit, but then left a few of my team members to continue. They did continue for a couple of months. So now I leave that project. Then no, that is when immediately after that project. No, that is when I officially began. Now said, how about I've built you know, this for other people. How about now I try
to build for yourself.
Now building for myself. So that is the first venture that Erick put his hands on. That was MetaQuad. Goes by the name MetaQuad. If you go to my LinkedIn, you'll still see MetaQuad. It's on my bio. And MetaQuad was purely, we began it as a venture, like is kind of a business development agency. The agency being its main work being that we're going to identify people who have projects. Mega projects that they need to work on, and they need to, you know, to expand, you know, find customers, approach different markets. So now our work would be now to do that work for them.
Business development.
Yes, business development. So I converged a small team, just a small team of the best, some of the best people I saw from the larger team.
From the previous project.
Yes, from the previous projects. I converged a team, began with a team of 4. Then we started pitching for projects. We started looking for clients. It was still the same model that I was using by pitching myself on Upwork. Now we are pitching the agency. Yes. So rather than now coming as Erick and saying that yes, I will come as Erick, but then I have a team. Now I'm coming in as MetaQuad.
Still on Upwork.
Yes, still on Upwork. We were still doing on Upwork, but then we also transitioned to now finding clients on LinkedIn. The conversation really changes when you're coming as you, as a freelancer, Erick, and coming in as
an organization.
Yes, I think the conversation changes, and now people see some seriousness. And even money wise.
They won't pay like what they would pay an individual.
Exactly. So MetaQuad, we come in as MetaQuad. A business development agency. We started looking for projects. So I would be the one majorly looking for the projects, negotiating with people, looking for people to hire. Then on the other side, some of my team members now would deal with the technicalities. Maybe something needs to be coded or developed, programmed. There was someone to do that. There was someone else to handle, you know, just
customer management.
Yes, customer management, those relationship management. There's someone to handle all that. So I'd be the person to just kind of coordinate
and oversee.
Oversee all this. And then now talk to the clients in terms on the business, the business terms. So after the other project that we now ended, once we've begun this agency, we went on and did about 5 projects then for the next period of 1 year. So we would now multitask different projects. We took this project, doesn't have someone, maybe a few taskers to handle that. Take another project, people to do that, take another project. So at one point we were doing about five projects
at a go.
And but then until it got to a point now, so now this is late 2022 because now it's almost now 1 year since I began the other project. So now late 2022 we had to then crypto went into a period of, remember all these projects were in crypto, even for the agency. Crypto went in a period which we call a bear period. If you understand how markets move, that we have we have periods when the economy is very good, and even here locally, if people can tell, there's a period when we've had the economy is performing well, people have money in their pockets, people are happy. Generally, there's money in the economy. But then there are other periods in which the world calls that period a recession, is when there's no money in the economy, and really it's not a matter of there's no money in the economy, but like there's reduced money in the economy,
like a decline.
Yes, there's a decline. When you look at stocks, they are losing value. When you look at everything, is almost losing value, especially in the financial markets. Banks are charging maybe higher interest, higher rates to give loans. So there tends to be less money. So in that period, that is when the markets typically go down. And now that happened for crypto 2022. Now from mid to late 2022. And what the first major lesson in business was that business has
highs and lows.
Highs and lows. Because from mid 2021, when we began my friend's project, to now mid 2022, it was a very good period for crypto. It was a very high peak. Peak period for crypto. But then, like now the low of that season, it got to a point that every client was canceling on the project. The client says, we do not have money to continue running this project, or maybe we've already put in a lot of money into this. We cannot continue any further. And even the customers who used to purchase these products are no longer buying because they also don't have money in their pockets to buy.
Definitely.
So that the crypto bear market happened, the bear period happened, and our clients cancelled one at a time.
Projects,
and I think in a period of at one point we had all the 5 clients, paying full amount. Then on the other, a month later, we have only 1 client. And this client is also saying that we have to reduce, we have to reduce the, the salaries, the budget for everything. So until now, 2 months into it, we had no project,
no clients.
Yes, and the worst case scenario was there's a client we handled. We did some work for about 3 months. And they had some pending dues that they were supposed to pay. But unfortunately, I think the client said that where they were getting money, they cannot access money anymore. The investors bailed out, so they could also not like also pay us.
Money.
Yes, so they had to part ways, and that's how we lost. I think over $6,000 that we had worked for with my team. Money that was due to us for like a period of 2 months. They owed us about 2 months worth of work. But but then they could not manage to pay us.
Yeah, because they also don't have money.
Yes, because they also don't have money. It was a tough period, a tough conversation to have with that, with the client. That conversation had to be had.
Anyway.
And we also had to come to the acceptance that it is what it is. The crypto market itself was gone down. Our clients are now down. The place where I used to source these jobs, which is Upwork, also the flow of jobs was almost non-existent by then. So we kind of had to now
restructure.
Now restructure everything. And we also had to call off the agency then.
I was actually to ask, not that I'm assuming you're the head of this team.
Yes.
You own the agency, so the team is literally like your employees.
Yes.
When you take that hit of maybe a client not paying,
do
you get to pay them out of pocket, or they also understand that there's no money?
We at the point when all these clients now started cancelling projects, we were about 10. The entire team was about 10. When the first 3 clients cancelled, we had to reduce the team to 4, to about 5 people actually, me included. So at least by the time we were reducing the first batch of 5, for those who had paid them to the end up to what they had
worked for.
So we just had to tell them, unfortunately, guys, we have to call off this. And so they understood. But then now this smaller team, about 4 now that remained with me, we continued. We tried to keep the lights on for another month, until finally the remaining even 1-2 clients that remained, until when all of them called off. And remember, for one client who was the major one, who was paying the major part, the major share, then they also don't get to pay 2 months of work. And remember, this 2 months is the time we extended with the remaining team of 4. So I just told them, guys,
it has been good.
It has been good. I managed to pay about half of 1 month's
salary.
worth of salary. But then so they also went home without payment for like a month and a half of their time. But they
understand because they're also in the business.
Yes, they understand because they used to see how
what's
everything
happening.
Was. They used to see what's happening. We were very open with the team. We used to tell them, we have this client, you know, just whatever is happening. So that is how the agency now came to an end. And when finally this smaller team of 4 had to now leave, I just had to, just go back to
the drawing board.
Go back to the drawing board. And I think for the next 1.5 years, I was really on a kind of a sabbatical. I would call it just a sabbatical now to reinvent myself again, because I had taken a lot of experiences from working previously in these previous projects. And I felt I needed to, reinvent myself, because
pull back in.
Just pull back, just get to understand, just go back to learning, because it was a period I actually decided to now go back to just self-teach myself. About just running a business, growing a business, just running something.
The basics.
Exactly.
We've reached the part now where you've taken the sabbatical. And you've said it's a period where you're just learning. And are you still now focusing on continuing with the crypto side of business? Or what exactly do you do during the sabbatical?
Okay, so this time I've chosen to call it a sabbatical, but it's just a period when I just decided to just cool off, rest, see things from a new perspective. So in this period, I got to team up with a couple of my friends to try something else. it was really just a period to experiment, because I think at one point I had stayed in the house for too long, until now my friends told me now we have to just get out of the house, try something new. And one of the main person who now pulled me into his side was running a marketing
agency.
A marketing agency. And from my experience back then, we used to call whatever we used to do then, we used to call it community building. So because we used to build communities for these projects, then now do marketing for them. So now, because I had this background in building communities, marketing, running social media campaigns, so now this friend of mine wanted to begin a marketing agency. So now he pulled me. He had opened an office somewhere along Thika Road. We pulled me, pulled a couple of his other friends. It was just, these are people we had known each other for quite some time.
So and this is 2020.
So now this is 2023. Late. Yes, late 2023. So I start going to his office along Thika Road. So I just told him, now that you have an office space and you have extra seats and extra desks and you don't have people to work, let me just come and use your space. Then I can offer some of ideas. But then it was kind of an engagement where we are not really working. Like, I'm not really working here. It was just to come offer my insights. He runs his own marketing agency. And
gives you a space.
It gives me a space. So I think that was now when I now started, like, kind of got out of my
shell.
Yes, exactly. My cocoon. We used to, when he was going to pitch to his clients, I used to tag along, just to offer that moral support, as well, and
also learn on the go.
Also learn on the go. And also throw some pointers here and there, especially the digital
marketing
jargons, digital marketing jargons, just to scare the clients and ensure that we land a job, we land a project. So we did that a couple of months. So I would also call that, it was also a period just to experiment. Yes, because he succeeded in landing a couple of projects. Got his own team. But then just a few months in, I think I was only there for about 4 months or so. Then I also felt that now I was now ready to now go back to
doing your own thing.
Go back to now doing my own thing. So he continued, then I left. So now once I left my friend's marketing agency, I now got back home, back to the drawing board. I mean, evaluated now. I have the experience I have gained in all these things I have done,
in the projects.
These new knowledge that I have come to. All this time when all this is happening, from back then, back in campus, I used to have there's a person I bumped into. I don't know if you've encountered. There's a person I used to look up to a lot. He's a business person, an entrepreneur from South Africa. Goes by the name Vusi. Yes. I've been a fan of Vusi for some time, as well as other entrepreneurs. So by watching whatever they were doing, by reading what they used to write on their social media, and also by also interacting with them. I've interacted with Vusi at an event in Nairobi. So by interacting with these people, understanding, learning from them, from back then while still in campus, I had this urge to just run something big, that at one point in time, I'm going to run one mega company, and just to solve like problems for our continent.
Yeah.
Like on a large scale.
Yeah.
So I've also learned, I've also like borrowed a lot of experience from this kind of mentors, social digital mentors, I would say. And so now this time when I leave the marketing agency, and now I feel like I want to now begin something of my own. So I call up my friend. I think I have this many friends that
are eager to jump on your ventures.
Yes. Now another friend. All this, there's never been one friend.
They're different.
Yeah. I call on another friend. We met back in campus. We shared quite some experiences back then. And now I feel now I want to now start something of my own. I want to find an actual problem that is maybe happening within our continent, and we want to solve for an actual problem. Like find, like build a real startup now. So we get to ideate. We begin get to ideate. Run through several ideas, look into different business models, just trying to see what it is that we can do. And one of the places that we landed at was that we noticed that Kenya and even Africa, some of the major countries in Africa, economically, that is, we have Kenya, Nigeria, Egypt, and South Africa. There was this kind of new, like the startup, like the world of startups was now booming. It was kind of just, it had begun to, take some,
footing.
Take some footing in the continent. We have investors from outside who are coming to issue funding to our entrepreneurs. So we thought, how about we want to start a startup? So how about our business? How about we make our business to be the business of startups? So our startup will
your target market is other businesses.
Yes, so our target market will be other businesses. And more so the startups. And so now where we then began looking at it was then from a point of business development, because that is the experience I've had from way back. So business development for startups implies something like maybe there's a startup that is that is setting foot here in Nairobi. They want to expand. They want to expand their reach. Like market. They want to market themselves more. They want to expand their customers, their consumer base. So we can approach them, tell them, you guys have this product. You have this market. You have this existing market that you have. But we think that you can get.
You've not optimized.
Yes, you've not optimized your market. We think or we presume that you can get this market. This other market. That is, you can increase your revenue by perhaps exploring a different segment. Exactly. So that is where we began. But so now that is where now Cach Finance begins. So it was kind of because we initially began with the name MetaQuad. We still ran with the name MetaQuad that we were doing before. But then as we got to research more about our potential clients, would be other startups. We got to understand that there are the startups, yes. And one challenge that we encountered that was that, yes, we are a business development kind of agency, and we want to serve the startups. But then if you look at how maybe a startup will want to run, is that it will want to have these people in-house. Because if you're running a small startup, you are lean. So you're running on a lean budget. So you really want to have the person who is doing marketing for you
in-house.
Yes, you want that person in-house.
Yeah.
Because then you'll not pay them as an agency.
Yeah.
You'll pay them
As an employee. Yeah.
So
which
then
is lower.
Yeah, which is lower.
Yeah.
And it cannot sustain us because now you are two.
Yeah.
Me and my friend. So we did pitch ourselves to a couple of startups.
Yeah.
That were doing well. Then that were just starting out. But then another big challenge that we encountered is that for the startups that have not raised funding or did not have really a lot of funds to run with, they could not manage to pay for our services.
Yeah.
But then, or even have maybe like someone like me in-house, because then I was not comfortable with the now idea that I would want to become an employee of another startup.
Yeah.
So we cannot become employees, but then startups do not have the money to pay us, to afford us as an agency.
Yeah.
But then when we now changed our client segment to now focus on startups that had acquired funding, then now we realized now for those who have acquired funding,
they can afford you.
They can afford us.
Yeah.
But then again, they don't really need us.
Catch 22 situation.
Yes, they don't really need us because by the time they've gotten to the point of raising funding,
it means they're doing something.
Yeah. It is important to state that all this period, I would call it was a period of majorly ideating.
Yeah.
Now, 2024, at the beginning of 2024 January, that is when I used to follow CMA.
Yeah.
CMA is the body that regulates financial institutions.
Yeah.
And especially those that deal with investments. So capital markets in late 2022, they had introduced new regulations, a new policy that would now guide how a new model of investments, which is crowdfunding.
Yeah.
So because I used to follow like their updates on their website and on their Twitter, I had noticed that sometime in 2023 about the new regulations.
Yeah.
But then I didn't really understand what crowdfunding is. I did not look much into it then. So at this period now, when you are ideating all this business development for startups, there was some of the persistent problems that kept coming up when you are talking even with other founders, which was the issue of funding.
Budgets.
Yes, the issue of money. So they need money to run the company. In as much as you have a very good idea, you have, you are the person who can work. You can work your ass off.
If you don't have the budget,
if you don't have the money, if you don't have the money, you cannot. Technically, our world is run by money. So funding was
pain point.
Yes, was a pain point, very persistent problem across many startups. So we, on that funding, now we started thinking in the line of how can we actually help these people, like faster raise money. How can we help them like structure themselves, work on what is needed to raise money from investors. What do investors look for? We understand what investors look for. And also the options that are available for startups to raise money from. Then we can now identify founders who are ripe to fundraise. Then we connect them. So because funding was a key problem that was arising in so many startups. And we have this background of business development. So then we can develop your startup or your business to access funding. So then we got to question with my friend. So what model are we going to take to help people to raise funding? So there are the different ways, the different business models around the funding space, fundraising space. There's venture capital. It's the main one. It's the most common one. Startups raise money from venture capital, which we're going to elaborate. there's something known as private equity as well. Someone can take a loan. That would mean you'd have to be a bank for a startup to take a loan from you. So we cannot. So we looked at what is the easiest model for us to come up with, and also what is the easiest model for us to execute in terms of connecting people who have money and people who are looking for money. Yes. So that is when we, along the search, as we're doing all this market research, we now bumped again into crowdfunding. So now crowdfunding is a new concept. Just freshly regulated by CMA.
Like how fresh?
How fresh was CMA introduced the regulations in 2022 October. We are now thinking about starting a crowdfunding thing in January of 2024. So only one year, 2 months in. And by the time we were doing this, there's no other crowdfunding operator who had actually taken any license from CMA or wanted to,
venture into that.
To venture into crowdfunding. So we were kind of the first, people. We are not actually the first. There's a couple of companies previously in that had tried to run with the crowdfunding model in other countries in Africa.
But Kenya, not in Kenya.
Yeah, not in Kenya. But then even the crowdfunding regulations themselves, it was still a very new concept because the first idea of crowdfunding, I think began sometime in 2019 from our research. There's a company in Nigeria that was trying to crowdfund for farmers. There was another one based in South Africa that was trying to crowdfund for climate-based startups.
Organizations,
But then we had noticed that all of them either began, ran for some time, then closed down. So all these other previous companies, all of them were not existent by the time now you are starting.
And maybe in layman, describe what crowdfunding is.
Yes, so now let me come to what crowdfunding is. Crowdfunding, the word crowd and funding. So crowd is many people. So you're bringing funding. So crowdfunding is a way to just changia, ni kama kuchangia for a business.
Like a fundraiser.
Yes, it's a fundraiser for a business. You see, like how in our Kenyan culture, tuko na the harambe.
WhatsApp groups.
We are very unified when it comes to changiaing for, on WhatsApp. For either weddings, funerals, and even school fees. People changa all the time. But now, why is it that people can actually fundraise for you to do that wedding or go or maybe pay for school fees of the child, but they cannot fundraise you. They cannot fundraise for your business. And business is going to, your business is going to make money, employ people, and
it's going to give back.
It's going to give back to the society. So that was now that is crowdfunding in a nutshell. So it's crowdfunding for businesses. But now, because now this is a business, and a business at the end of the day makes profit. So if you're going to help you fundraise for your business, then you also need to promise that you're going to pay us back either the money that we fundraised for you, or you can give us a share of your business so that any future profits that you generate from your business, we can be getting a share. So
like buying shares.
Yes. So crowdfunding comes in two options. One is this
lending.
Money, is through credit. This money that you collect from this crowd, they either give that money to you as a debt, which you're going to pay back with interest, or you pay them back by giving them a share in your company,
business.
In your business. So let's say, for example, you let's use a very simple analogy. Like you want to buy like a bus, like a commuter bus for truck. For example, which one should we go with?
Metro.
For example, Metro.
Yeah.
Yes, there's Metro Trans, Super Metro.
Yeah.
So a bus, maybe for example, a bus costs 5 million shillings. So if 50 people can come and each contribute 100,000,
Yeah.
and this Metro is purchased,
Yeah.
every single day, this bus makes money. So this money
Yeah.
needs to be distributed in equal, or maybe according to how everyone
Proportionally.
contributed.
Yeah.
Yes. If someone contributed 1 million, if another one contributed 100,000, another 200,000, so they're going to be
proportionate.
It's going to be proportionate.
Yeah.
So that is one of the models. So everyone, so if it is the equity option, everyone has a share of that bus.
Yeah.
So
depending on their contribution.
Yeah, depending on their contribution.
Yeah.
So let's say someone has a 2% share in that Super Metro.
Yeah.
So for if this Super Metro makes 100,000 shillings in a month, and your share is 2%, so then you're entitled to get some 2,000 shillings every month from it.
Yeah.
So that is the analogy of the equity side. So if it is a debt, maybe I as Erick wants to purchase a Super Metro. I call 50 of my friends, or just 50 partners. They each contribute. We have the bus. So if it is the debt option, I'm going to pay back. I'm supposed to pay back the 5 million, maybe with an interest. So maybe I can say the interest is like 10% every year. So I'm going to pay you back this debt in 3 years, and I will pay with an interest of 10% every year.
Yeah.
So I'm going to pay this debt maybe on the second year or on the third year. So maybe from the second year, I will pay every month or every quarter, or I will pay at the end of the year for the next maybe 2 or 3 years. So for the debt, you have to be clear on how
payment plan.
Yes, the payment plan. How is the money going to be paid back, and at what interest rate, and what are the conditions. Then for the equity part, you need to know what percentage are you going to offer the people who invest in your business. Yes, and that equity, the other conditions that you also have to consider, like when you offer a shareholding, there's something like voting in a business. For a business maybe to make a major decision, maybe to try a new market or launch a new product, especially for big businesses, there has to be
the major shareholders
shareholders have to vote on that decision. So that is crowdfunding. It
actually
comes yes.
You've explained it quite well.
Yes.
Like I feel like I'm in a class.
I've
really understood now the concept of through the debt financing or through the private equity. But now how do you come up with these people who are willing to take that risk? Because you've mentioned it's a crowd. So you have to come up with that group of people who are willing to invest in this, either through lending or buying the equity.
Okay. So how do you find these people to actually, who is the crowd to now bring the money? So now, that is when now we begin Cach Finance. Let me now go back to now where Cach Finance began. We've now gone from the business development. We've now decided let's pursue the crowdfunding model. We named it Cach. We actually borrowed Cach, the name Cach, from another idea, which was related to just bringing many people into
like
an investment.
Pool,
Yes, like a pool to pool their money towards an investment. So these people who are supposed to bring this money, the regulations by CMA, they pretty much state everything, like how that business should be run. So now, and these are the conditions that they offer. So there are two categories of investors. Two categories. One, we're going to call that a high net worth individual. So that this is someone who would call a rich person. Yes. So this is someone who can comfortably invest their 1 million, 2 million, 5 million into your business, and they will not sleep hungry the next day or the next month. They can wait for that money for even up to 3-5 years for that money to mature. Then the second category of an investor is a retail investor. A retail investor is kind of the typical mama mboga,
Yeah.
or just someone who can, someone who cannot maybe invest over 100,000 shillings, you know, towards a project.
Yeah.
Because even according to CMA, there are limits that have to be followed.
Yeah.
So for the high net worth individuals, they can invest a minimum of 1 million shillings.
Yeah.
Yes, they can invest up to a maximum of 10 million shillings, between 1 million to 10. For retail investors, the maximum you can invest in is 100,000 shillings. That is per year.
Yeah.
Yeah, annually. You cannot, even if you have you pick a deal, you make some money and you want to go crowdfund somewhere, you did 100K, you've already invested 100K, you cannot crowdfund in another venture. If you're a retail individual, you're not allowed to legally. But then a high net worth individual, they can invest as much, you know,
up to a cap of 10 million.
Yes, exactly, up to a cap of 10 million. So these are the people you are supposed to find, according to the regulations. But now let's come back to economy. So who are we dealing with? So the people to invest the 1 million, 2 million, 3 million, where do they typically take their money? So these people, you'll find this person buying a government bond, the treasury bills, treasury bills. You'll find them buying shares, Safaricom equity shares, you know. So trying to convince them to invest in a new business, which they do not understand, and we have this kind of culture for our economy, for our people, where we don't really trust is something that
it's still shaky.
Yes, it's very shaky. It's not shaky, it's very shaky. Especially when it comes to business, because I think people have lost. People lose money in so many other schemes, ventures, so many other ventures.
Unless you find someone whose risk appetite is very high.
Yes. And so the people who can actually crowdfund to a business, who have the money to crowdfund to a business, they are not comfortable crowdfunding in this business unless now you're established. So you have to get to a point where you're now established. You know, we understand you.
You have systems.
You know, you have systems. So that is the person, that is the main person you want to go find. If it is to come to the retail side, the common mwananchi telling someone to bring their 10,000 shillings and you will pay them back in 2 years. You want to pay them back in 2 years.
You can imagine the conversation.
You're simply, I think you're even not going to have that conversation. In most cases, people will just brush you off. So, but then we began. We began Cach Finance. We said that this is the model you're going to take, and you're going to fight our way until you get people to understand what crowdfunding is, how it works, and even businesses themselves to be open to crowdfunding. Because on the business side, on these different startups, different ventures who want to now raise funding, crowdfunding means that you have to put your documents out in the public,
like your financial statements,
how your management, all your about your operations, your performance.
You have to be compliant.
Yes, you have to be compliant. So it means that you also have to be in the open. Now, if you go to many shops, many businesses around us, you want to tell this person, I want to see your bank account, your business bank statement for the last 1 year. I want to see you. Okay, you say you have 5 employees. How, you know, have payroll. Your payroll. Have you been paying tax for your employees? And in most cases, most of the engagements people have outside here just somehow very informal. Like if we look at statistically, the number of formal businesses that we have, even just here in Kenya, is about 8%. All the other is the very formal businesses. That is all their documents, all their books are in check. Everything is in check, is only 8%. Another about 13% is somehow semi-formal. So they have some books, they have some records, but then many other records they don't have.
Yeah, missing.
Yeah.
And
they still do very offline.
Yeah.
Yes, offline transactions.
Yeah.
You still record in a in a hardcover.
Yeah.
That is where you note down your sales.
Yeah. And some are not even if they have the financial statements, they are not audited.
They are not audited.
Just,
exactly.
Yeah.
So people they just run. They've been existing for 10 years.
Yeah.
They know they just run.
Yeah.
Yeah. So but then so you can see that the majority, that is over 80%, almost 80%, is informal. Of the businesses are informal. So these people have no records. They don't have these official records. They're not compliant in many other areas. And so it will be very challenging for you as a crowdfunding operator to come and onboard these businesses. Because it means that then you have to now take them step by step through the process of becoming compliant, having their books in check.
And even it will take time.
And it will take time. And even letting them know that all their transactions, they have to go maybe through a channel. If all your customers have to pay maybe through a bank, or maybe through somewhere that you can
keep the records.
You can keep the records. You can just a harmonized way of operating. So but then again, we are here to fight. My friends, we decided this is the model you're going to take, and we're going to maneuver through. So,
and just to take you back shortly, now these compliance requirements, are they stipulated by CMA, or it's you as the crowdfunding entity that you've come up with this just to safeguard yourself as well?
They actually stipulated by CMA.
CMA,
because CMA runs different regulations. They are the ones who regulate even the stock market. Like the public companies. So the same models they use for the established businesses. It is taking the same model, bringing it to even these newer ventures. So they are the ones who've stated that for any business, because they had actually issued some the conditions for a business. On the business side, a business can raise any amount from 100K all the way up to 100 million through crowdfunding. But then for an existing business that is an SME, a small or medium enterprise, medium enterprise, it needs to have been in operations for a minimum of 2 years. And if it is a startup, it needs to have been in operation for at least a minimum of 6 months. And this period that you've been operating, you need to show how your money has been flowing, how basically your records need to be in check. So the CMA guidelines provide very clear. They say that your records, you have to be compliant, an audit, an audit report, all that. So they have provided the basic guidelines, which is the records needing compliance. But now we decided to go a step further to make these conditions
friendly,
friendly in a way, but then still
you remain compliant.
But then still you have to remain compliant. And at the end of the day, we have to be safe, because if you're talking about a conversation, you have to collect money from many people. Then in the case that this money were to be lost, a venture closed down, or this money were to be lost, at the end of the day, people really don't understand. I think people don't understand how businesses operate, or even how, even what makes companies fall. So by the time, let's say a few years down the line, if a company comes and falls and closes shop, someone who contributed their 5,000 shillings all the way back in a village, maybe they don't understand that a company closed down.
How? With my money.
in their mind, it will be like, these people ran with my money.
Scammers.
So these are scammers. So then it would now be a conversation of trying to put out a lot of fires. So that is why the compliance.
It's a crowd.
Yes,
You're not dealing with one financial.
You're not dealing with even sophisticated investors, people who understand. Because if you look at the high net worth individuals, for them, why they have to invest their limit is a minimum of 1 million shillings, is by the time someone is putting in money of this magnitude,
Yeah.
they at least have some basic understanding,
Even of the risks involved.
Yeah, the risks involved.
Yeah.
That how businesses operate, how businesses make money, how they lose money, how they close.
Yeah.
So explaining to them that a business that you invested in closed down would be easy.
Yeah.
Because they would understand.
Yeah.
But then come to the average person, a motorbike rider who invested some 10,000 shillings of their 6 months savings,
money.
their hard-earned money, their 6 months savings, they invested in your company because maybe they were promised your 10,000 would come back as 30,000.
Yeah.
That person is not going to understand.
Yeah.
You guys have my money. You bring my money.
Yeah.
So that was it. So that is CMA, very clear on the regulations, on the guidelines.
Yeah.
So we had to follow everything to the letter. But then another hurdle that then now from those guidelines is that for us to be given a license to operate as a crowdfunding operator, we need there's a threshold of the minimum capital that we should have for operations, which is 15 million shillings.
That is the compulsory deposit with CMA, or just to show proof that you have that money?
We need to show proof that we have money, that we have that money.
Yeah.
So the one, it is not a compulsory deposit. It is they say you need to have 5 million in working capital, and you need to have 10 million in shareholder capital. So that is, we need to have either investors, either ourselves, as the people who are founding the company, either ourselves or our investors need to have put in a minimum of 10 million shillings in shareholder capital, and then just money to operate.
5 million.
We need 5 million.
Yeah.
So if you accumulate that, we need to have about 15
million. Yeah.
So now then ourselves, we are in the business. We are coming in the business to help people raise money.
Yeah.
But then also
you
ourselves,
also need crowdfunders at that point.
We need people to give us money.
Yeah.
And at one point, I used to join Google Meets for CMA. CMA organizes actually Google Meets every month to teach people about their products. There are actually so many products that CMA has.
I should hop on that one of these days.
That could benefit so many businesses out here in terms of how they raise capital, how they find money to sustain their operations.
Yeah.
A lot of products that CMA has, but somehow this information is not well, kind of elaborated distributed to the mass, to the mass market. And I think it's one of the things that it is one of my personal missions with in the ventures that we'll run, is to just make these CMA products more
digestible.
Digestible to people out here.
Yeah.
So now, in one of the meetings, in one of the Google Meets, where they were explaining, their products, I got and I asked. So I waited for the time for the Q&A session. Yeah. And now I asked these people, I told them, we're in the process of starting a crowdfunding operator entity.
Yeah.
And we are trying to find a way how we can raise the 15 million so that we can now apply for the license.
Yeah.
And they said, the other person who was responding to me told me, so now my question was, can we crowdfund ourselves?
It's a chain. Even your crowdfunders have crowdfunders.
Yes. So can we, because then we want to be sure that this model also works.
Yeah.
So can we be the first person? Can we
proof
be the
of
first
concept.
Yes, can we be the first proof of concept?
Yeah.
Can we run our own crowdfunding campaign and see if we can raise this 15 million? Then once we have the money, we now come and get the license.
Yeah.
And then they told us that it would be illegal to run a crowdfunding campaign.
It's legal or illegal?
Oh. It would be illegal to run. So in the regulations, they've actually stated that as a crowdfunding entity, we cannot raise money from our own platform.
Oh, yeah, I get it. Yeah.
So it is like we cannot serve ourselves
unless now you look for other channels.
Yes. So we would need to find another crowdfunding.
Or you can still raise through crowdfunding, but not through your own entity.
Yes, not through our own. By finding another crowdfunding platform, it means that they already have the license to run.
Yeah.
So at the end of the day, they are trying to protect the end investor, because even if this investor comes and puts money for us, gives us money, and we raise the 15 million, but then we also don't get the license, and we try doing it through by on our own crowdfunding platform. You see, we can simply run away with the money. So definitely. And we don't have the license. So you get exactly.
Your hands are tied.
Yes, our hands exactly. So so you were told we could not raise the money by ourselves. We had to find other ways to raise that capital. And but then so that was just on the part of because when you're running, at least when you're just trying to prove that proof of concept, we decided we're going to try this even without a license. We're going to try at least see if we can do the first crowdfunding operation. And this whole time, now from that January of 2024, I am myself and my friend, and we had gotten an extra 2 people to just so we are about 4 on the team. But then I unfortunately, a few months in, I realized we kind of realized from the research we were doing that in as much as it is a viable model, idea and business model to pursue, there's quite a lot of other things that needs to be dealt with when it comes to our economy. Because where we are borrowing this concept has been working. Like, for example, Nigeria, in the US, actually, the other countries, Nigeria, South Africa, all the other companies we had seen, all of them had closed down. All of them had closed down. So we wanted to understand why. So as we also now doing more research about our economy, we realized that there are more underlying issues that needs to be dealt with first before we can actually, because when you ask anyone, when you ask most startups, back then to the other conversion of the business development for startups, most startups did say that they want to raise funding. Other businesses, even other smaller businesses that are not necessarily startups, but they are SMEs, they sometimes encounter challenges to raise capital. Someone needs some working capital. So you realize that sometimes it is not really the lack of funding that is the challenge. It is the underlying problem of maybe no good records, governance within the business, and just maybe very operations. Just operations, just some inefficiencies in operations that really make
the business.
That really make the business not able to raise funds from outside. Because at the end of the day, if you look at any business there is, or any startup there is, at the end of the day, you have to solve a problem for customer. So the startups that maybe failed to raise funding, it is that they had not achieved, they had not found, they had not really, achieved.
Found a specific problem they are solving.
Exactly, that specific problem they are solving. Because when you're now solving a very specific problem with a clear solution for the customer, then you're definitely going to find a customer. And if you can find one customer, it means that you can find 5. If you can find 5, it means you can find 500. And by the time you're finding this, by the time customers are now looking for you, it is the same way that investors will also come looking for you as a startup. But then if you look at an SME, because SMEs are more or less the businesses that at least serve the regionals. They have the shops, the supermarkets, the chains of an SME is somewhat different from a startup, because it doesn't need, because a startup, in a startup you're really trying to experiment an idea in a big scale, in a short period of time. So that is why they need the big capital so that they can run their operations. But then if you look at an SME, their model, how their model works is that an SME, you begin a business. Let's say my business is to sell, let's say, these glasses. And I have to find a customer to buy these glasses. When I open a shop, I really have to find customers to buy my glasses, because if they don't, then I will need to close down my shop. So you need to have an existing customer. And for an SME, that has been operating for some time, as long as they have their records in check, they have their their governance is good, the operations are they're in check, then there are so many organizations out here that are providing capital, working capital for these businesses. It is also very easy to maybe acquire a loan from a bank, because they can come to your shop, to your entity, to your enterprise. There's machinery in their assets. You can offer as collateral for the
financing.
Exactly, for the financing. So we identified that these underlying issues need to be dealt with first
before you get to the funding.
Because one of this challenge of what if we've crowdfunded for this entity, but then a few months down the line or a few years down the line,
they close shop.
So then we are left with a reputational risk. A lot of damage will be done. And even just buying this trust again from the retail investors will be very tasking. So now there's this transition from understanding, so first being very excited about the crowdfunding model, because it is still very new in the market
and viable.
The first mover advantage of being the first crowdfunding operator. There was that excitement at first, but then as we got to understand the different nuances of our market, of our economy, of our people, we now started seeing the subtle issues that really cause businesses not to raise capital when they need to, and just what makes even businesses close down, because at the end of the day, a lot of businesses close down, and statistically, by the time we are getting to by the time a business, if 10 businesses were to be started today, by the time they are reaching their 5th year of operations, at least almost half of them would be closed down. And by the time we are getting to the 15th year, to the 10th, 15th year,
maybe one.
I think maybe only one. In every 10, only one will have survived all that long. So what are really the things that make these businesses to fail? All these issues that really affect our businesses. And we identified that while funding, yes, is an issue, it is really not the main issue. So now we are transitioning. So now Cach, ever since, so now this time, so all this time, we are still in the process of market research. We've not really started building this crowdfunding platform. Because just to have it developed would take a short period of time. So we decided to wait until we have enough data to run with. So as we are gathering this data, we realized that yes, crowdfunding is a viable model, but somehow
not viable at the moment. Because approaching from the funding, trying to solve the funding issue, be typically just treating a symptom of a more underlying condition for the businesses.
So over the course of now 2024, there are realities we had to also deal with. Even I myself as the founder, and with my small team of 3 extra people, the realities of you're also trying to build something, and you need capital. So even this market research, just moving around, talking to people, we need at least some basic, we need some basic funds. And all the 4 of us, apart from me with some, some source of, just a little money, a little saved up money, to a little bootstrapped a little bit to at least enable us to move around, because we actually did move around. Talking to businesses out here, we moved around. We did Central, bits of Central, a bit of Nairobi. We did a bit of Western, because one of the team members was from the area. We did a bit of Western, we did a bit of Rift Valley, the Nakuru, Naivasha area, region. And we also did a bit of coastal. We tried to traverse just the country, just to understand the different challenges that people go through throughout the country. So we could not, at some point we could not, the four of us could not continue doing this, because then things are not moving as fast as we intended to. Because if you look at how maybe most startups are begin, is that people move quite fast. You have a product ready in a month, you try it out, doesn't work,
try another one.
Try another one, doesn't work. But I like taking my time before getting to something. So we wanted to be really certain whatever the major problems that really affect us. So now Cach has kind of been shifting from trying to pursue that crowdfunding model to now a model to understand how ecosystems operate. And by ecosystems, I mean, if you look at any business, a business, like the way we say, like no man is an island. Same applies to a business. No business is an island. If you look at any business, it has a couple of partners it must have for it to operate. There is the suppliers. Could be the suppliers, the bank where maybe they get loan facilities, financing. It could be also the employees, even the employees as well. It could be also the like other partners, like other partners who help them maybe to reach the customer. Because you find that some business, one business maybe borrows into another business to reach the customer.
Like a marketing agency.
Yes, like a marketing agency, or even a distribution agency. For example, for a company that manufactures or maybe processes goods, those goods need to be transported, to
a wholesaler.
To a wholesaler, distributor, to the final consumer. So understanding these ecosystems, how these ecosystems work, and by understanding the ecosystems and the players in it, then we can understand how they relate, how a certain business relates with their partners and the people within the ecosystem, how money flows within that ecosystem. And once we've understood all these different factors, then we can now evaluate very well what this business needs in terms of money, the financing part, and also now leaning towards more on the lending side, on the credit side.